Hello my fellow freedom builders and welcome back to the channel. Today's video is about President Trump and his vendetta against the social media, and of course we'll have a look at the social media stocks, or at least the largest of them, to see how they are affected and if we actually think that this Trump stunt, dare I call it that, will have any effect on the stock prices. Alright, so if you've been out of the media loop for the last couple of days and have no idea what I'm talking about, it all started with Trump. He tweets a lot, we all know that, and that can affect the stock market, but he tweeted something about the possibility of voting via normal mail. And he's very much against it. There's no doubt that is because that the Democrats are getting more mailing votes than the Republicans, and that's a political issue, of course. But he kept saying that, and he kept saying that there was a lot of evidence that there was some fraud going on there. And Twitter dared putting a little link in his tweets saying, well, here are the facts. So they actually started fact-checking Donald Trump. If you ask me, it was about time, but I'm not to decide what they should or shouldn't do. But they put in a link and saying, hey, this is what Trump says. If you want to know the truth, then here it is. And Trump went completely ballistic. And he said that he would make a change to a law. And if we just look at what we are talking about here, it is something called the Section 230 of the Communications Decency Act. And I just marked it here. It says actually that no provider or user of an interactive computer service shall be treated as the publisher or speaker of any information provided by another information content provider. What that means is that companies like Twitter, Facebook, Snapchat, Instagram, so on, they can't be held accountable for what people put up on the website. And that goes actually for all websites with open forums. This Section 230 pretty much removes the responsibility here. And as you can see here, it is from 1996, where the internet was new and where some lawsuits were run against some internet companies, and they felt a need to, if the internet should actually grow and if any company should dare put some platform up for free use, then they needed to make this Section 230. All right, so far so good. Now Trump he wants to sign, he did sign an executive order targeting social media companies, calls it a big day for fairness. All right, what Trump is saying, and I should say that you're welcome to disagree with me here, because some of this is also maybe a bit of a political bias, but what Trump is saying is that these platforms, Twitter and Facebook and so on, that they are censoring him and other conservative politicians. The funny thing is, and that's just my personal opinion, that all of his complaint and his threats against Twitter was published on, yes, you guessed it, Twitter. So they're not really censoring him actually, they're fact-checking him. And I know that can be annoying for a guy like Trump, but to be honest, I could see the reason for doing so, maybe not with everybody, but with people with great influence. We do it already. Let's say on YouTube, if some big influencer have some product placement where they are promoting a product, they actually need to write in the bottom and say, hey, I was paid to promote this product. So we know that people with great influence can actually both be good and bad. And to be honest, I think that the most powerful man in the world, it would be okay for Twitter and Facebook and all of the other platforms to say, we are just fact-checking what Trump is saying. But that's my opinion, and you're welcome to have another one. The thing here is that Trump might have been a bit early out here. And I know this is not just a political chat of mine. This is leading to my analysis of the social media stock environment. So Trump might have been a bit early here, and he might not have thought this all through, because What we hear now from sources inside the White House is that Vice President Pence, Kudlow, Mnuchin and so on, they are terrified for the effect of what Trump is doing with this executive order. Because if he is canceling the Section 230, it means that every website that has an open forum can be sued if just one user in there are saying something that is violent or racist or anything that anyone can take offense of. So what they are thinking right now, or at least that is what the sources from inside the White House says, is, well, the conservative world, political world in the United States, they are using a lot of websites, a lot of open forums. And if this Section 230 is to be really taken down, then you can be pretty sure that every conservative media from Breitbart and out to the right, they will be swamped in lawsuits because, well, that goes for both the right and the left. When you go far enough out both directions, then the comment sections are really a study in violence and foul language, to be honest. So what these other Pence, Kudlow, Mnuchin can see is, first of all, taking down the Section 230 here would pretty much also take down the entire conservative website network. They would be completely dead. Another little thing is that most of the large medias, Facebook, Snapchat, Twitter, and so on, are actually quite large contributors to the presidential election campaign, which might also be a bit in question if they go forward with this. So another thing is Trump is communicating to the world via Twitter. And if we are looking at the Section 230 being taken down, I think it would be pretty certain that Trump's account would be banned quite quickly. Because what he's stating on his Twitter account is actually against pretty much all of Twitter's rules. I saw a walkthrough of a lot of his tweets the other day, and they were compared to the Twitter rules for a post put up on Twitter, and they were violating them all. So just the other day here, he actually said, and that was about the looting and the rioting in one of the states right now. He's writing in one of his tweets here, "These thugs are dishonoring the memory of George Floyd," that is the black man that was killed by the police, "and I won't let it happen," so on and so forth. And what he says down here, "When the looting starts, the shooting starts." That is a direct quote from a policeman back in 67, 68, where they were hitting hard down on some black protesters. So what Twitter is actually writing up here is, this tweet violated the Twitter rules about glorifying violence. However, Twitter has determined that it may be in the public's interest for the tweet to remain accessible. All right. So if Trump wants it to be so that Twitter can be sued every single time that they do something wrong or somebody writes something that is either violently or racist or whatever, then you can be pretty sure that Trump will have his Twitter account shut immediately because he's violating all the rules. Now, where do I want to go with this? I want to go there that he might be writing or signing this executive order, but I must admit that I don't think it will have any effect in the real world, because I think that Trump and his supporters will pretty quickly realize that doing so will hurt them more than it will hurt the social media. So I think this is political spin up to the election. I might be wrong, but that is my analysis of it. And I think it is him talking to his base and saying, hey, I'm an action kind of guy and I get things done and don't mess with me and so forth. And pretty much he wants to take the focus away from his handling of the crisis with the flu, not the flu, but the virus and so on. So that's my analysis of it. But let's go to the three stocks that are some of the largest and that I think will might be in play here. And of course, What I'm going to do now is that I'll just make a quick go-through analysis. But I felt that this pre-analysis of the entire situation was important because we can analyze all we want to of single companies, but if something massively is changing around it, then our analysis of the price movement and the numbers, it doesn't really matter, because if President Trump, for instance, were shutting them completely down, well, then of course the stock price would tumble. So a pre-analysis is important, and then we can dive into the different companies. So let's start with Twitter, since they are the one in play right now, or at least most in play. And what we can see here when we're looking at the chart, we have the weekly and the daily chart. They have been dropping somewhat here, not extremely, so they're not really signaling that everything is completely collapsing, but they are down 6-7% over the last couple of days. What I think will be realized pretty quickly is that this is simply hot air coming out of Donald Trump. I don't think that he will do anything to hurt his possibilities of using the conservative website network, and he will not be doing anything to shut his own account down at Twitter, which of course could be what they call the nuclear option. If Twitter thinks that he's actually messing too much with them, they can say, well, you have been violating our policies forever, so now we are taking the same hard stance and shutting you down. I don't think that will happen, because Donald Trump is a big advertising pillar for Twitter, no doubt about that. But in the last end, if they felt enough pressure, that might be some action they could take. I don't think they'll go that far. If we're looking at the price of Twitter, it had been in a downwards trend on a weekly chart, and right now they are at the top. They are in... are they just tipping down? Now they are in what I call the yellow zone. So relatively they're doing worse than the overall market, but the RSI on a weekly chart is still above 50. So that is actually fair enough. But technically it was not a stock that I would buy right now. If we are looking at the fast graph chart here that I normally use, we can see that Twitter has actually been performing quite well in the growth of their earnings. Absolutely. They have for a long while been fairly overpriced, no doubt about that. But had they continued this growth here, then they could actually have been a good value in a very short while. They are down here, and had the growth continued, then of course they were actually going to be good value. However, what we can see is that between 85 and 90% of their revenue comes from advertising. And the advertisers, the companies that advertise, have been very severely hit by the crisis, which actually means that Twitter has removed their guidance from Q2, I think it is, and also for the rest of the year. So that means that these estimates might be quite fair. There'll be a big collapse in the earnings, no doubt about that. And Twitter is not alone there, of course. It is a picture of a lot of companies being in a lot of trouble, and therefore maybe saving some on the advertising budget. So that is what we see here. So right now, in this current situation, I would wait. I would not buy Twitter right now, simply because I don't like buying into a declining earnings that I can't really see how far will go. They are estimating that it will go up again slowly here, but we are setting it back to 15, 16 here, and that is not really satisfying. So actually, should the price go down to be good value here, that's a bit annoying. They don't have the best of tools here. We could see a huge drop in prices here over the next couple of years. Now, it is so with tech companies that they are not always following the same rules here, but it's just to say, and we can see the same here in Stockopedia, it's just to say that I don't like companies that are not steady growers in earnings. And what we can see here is Well, they have a PE ratio of 41. We cannot use that too much. Price to book value is actually fair enough. What we can see is that the earnings per share have been going up quite nicely from the negative up in the positive direction. You can see on the blue bars. But then, of course, they're getting this massive hit in earnings. You can see here that they are estimating 63% here. I have seen estimates of 80% drop here. And then they hope that's the estimates, to start growing their earnings again in 21. This could be a reason to buy if you thought that Twitter had actually been too expensive, and now they might be dropping a bit, and you could buy on the drop if you were into that. But what I really like is I like to buy steady growers, and I don't like these drops, so I'm staying out of the uncertain. These estimates for 2021, we are 1.5 years out here. And to be honest, in the current situation with the massive collapse in a lot of economic structures in the world, I would not really trust estimates 1.5 years out in time. I would doubt estimates that go 1.5 months out in time. So 1.5 years, I would have a hard time really thinking they would not be adjusted at some point. We can see that the free cash flow has also been growing greatly, and actually they have a great liquidity. They have a lot of cash, so that is a good thing from the standpoint of being an investor. We can see here the working capital is going up. Net fixed assets here, absolutely. So the net debt is looking great, no doubt there. And we can also see that the let's just have a look at it here. The interest coverage here, quick ratio, current ratio, they are amazing. So there's actually nothing wrong with the liquidity, with the cash in the company. They have a lot of buffer, and you can see that all the light blue here are the estimates. They expect a drop and then again a rise. The analysts are down at around hold here, and that's also where I am. If I had a huge position, I might not buy it right now, but I would not be. I wouldn't sell it right now, sorry, but I would not be buying Twitter as it is right now. You can see the earnings quality is 61. That's actually fair enough. The value momentum are quite low, so the overall stock rank is 38. I like that to be up around 70. Now let's move on to candidate number 2, and that is Snapchat with the ticker symbol SNAP, Snap. They actually have some solid top line growth here. And if you're looking at the price chart, they are in the green zone, meaning that the RSI is above 50. They're doing better than the overall market. If we're looking on the price with some technical analysis goggles on here, we can actually have a look at it here. Just a second. Here we go, I just need to find my toolbox, and we can see that it is at the top of a range right here where we have some tops on the weekly chart that has been tested several times, and we are there again right now. When we see these several tops, I'm not too fond of buying straight up into a top like this. I would rather miss a bit of the upturn here, or the uptick here, instead of buying straight into a collapse of price. So what I would look for in Snapchat, if I were to buy it, was a break up here, a drop to the support, and then some buying strength here. So that is the technical part of it. If you're looking at the fast graph, we can see that they're not really making any money. So it is a bit tough to derive any clever words out of this chart. So we can see the price here, but there are not any earnings whatsoever to compare them with. We can look at the Stockopedia, of course, and we can see that they have an okay quality of earning. Value is low, and momentum in both, that's both earnings and estimates and so on, are going up. PE ratio of 286, we cannot really use that number for anything here. But when we go down here, all of these red numbers are showing me that this is a company I will not be buying stocks in. And I know I'll get some comments saying, well, Hans, you're completely blind. This is the huge grower. It'll 10 double in price and so on. Fair enough. But when it has doubled or tripled in price and they are starting to show me some good, solid, long-term growth in earnings per share, in free cash flow and so on, then I will be buying it. And it might go up 200 or 300% before that is relevant for me to buy. And of course, I will miss a lot of the bottom movement, but that is the way I invest. And if you're sitting there and thinking, I want to comment in the comment section saying that he's a complete fool not buying it now, well, don't bother, because I'll not change my strategy. This is the strategy I'm using, and you're welcome to use another one. Another strategy can be just as good. It's just not mine. So this is the trend following strategy I'm using. I'm spotting trends in price on a weekly chart, and I'm spotting trends in earnings, free cash flow, and so on down here. And that is the way I have been investing for a lot of years. What we can't see here is, and that is of course because they have negative earnings, then they also have negative interest coverage, meaning that they cannot cover the interest on their debt with their earnings, because there are no earnings. You can see that their sales are up. The thing with Snapchat is, and they are very different from Twitter, because they have 75% of all their users, they have it down in the sub 34-year-old category. So between 14 years old and up to around 34, they have 3/4 of their users down there. As you might know, now I'm soon to be 47, so I'm actually not using Snapchat that much. I'm way above the 34 years old, but they have been really big on this augmented reality, where you can take a picture with your phone, and then they have put some digital layers on top so that you can look like an animal or a monster or whatever. But a lot of the other companies, Facebook and so on, they are coming really fast here. They're putting a lot of effort into this, so they will face some severe competition here. Again, they have a great liquidity, so both Twitter and Snapchat are actually they have some great liquidity that could be interesting for some investors. We can see that they're covered by 52 brokers, and their overall estimate here, or analysis consensus, is pretty much a buy. And that is way better than the hold from Twitter. So if I were to go into Twitter or Snapchat, I actually think that I would choose Snapchat due to they have some great potential in the group of people they are aiming for. They are trying to diversify it out a bit so they can get some of the older age groups in, and older, that is among that I am among the older in the older age group. They are trying to figure a way to aim more also for corporate use, where they today are simply not a player in that game. So the Snapchat, Twitter, I would say, and that is just from my quick analysis here, that Snapchat actually do have some more growth potential right now. But again, it can be different, and this crisis due to the virus can turn up and down on everything pretty much. All right, on to the last candidate. And here we have Facebook. And I must admit I'm a bit biased here, because out of Twitter, Snapchat and Facebook, then Facebook is my absolute favorite. I do have a Twitter account. I think I have 90 followers or something like that. So that is not something great at all. But Facebook I use for everything. And that might be because I'm closing in on being in an older age group here, and that is how it is. But Facebook is great. They have their difficulties as well, but they are actually diversifying a lot more out. They also have their entire virtual reality leg that they are pointing at right now. They have also withdrawn their guidance as far as I can tell, and that is of course just as with Twitter and I think Snapchat, but at least Twitter, they're simply saying we have no way of estimating what this year will be like on the in the advertising space. Facebook, of course, were hit by the crisis as well, but it is one of the FANG stocks, and they are the stocks that have been going up completely crazy the last month here. And if we are taking out these outliers, and sometimes we do that when we are trying to get a picture of the true trend, then you can actually see right now, let me just delete the regression channel down here, that they were in a very nice trend here. Then it broke down, of course, due to the crisis, and now we are back in the top of the channel here. So we might get some sort of drawdown, a retracement down here. But I actually think I do like the trend here in Facebook. Out of the three, I think the technical viewpoint here is they are the strongest here. But let's see what the fundamentals are saying. Now, when we're looking at the fast graph, we can see that we have a very nice picture of growing earnings, and the stock has been in a value area for quite a while. So you could have bought it over here somewhere in 17, and it would have been going sideways for a couple of years. But with it, what we can see with these long-term value investments here is that when they're down here and the price have gone up less than the earnings, then we see a very nice potential of the price over time trying to reach the earnings growth again. So right now, actually, I made a video about Facebook, was it a month ago or something like that, where I said that I saw some very good growth potential in the price here. And right now, there might be some more actually. They do have, of course, a drop here, but what we can see is that the estimates are growth here in 2020. And extreme growth, I would say, 35 and 22% are the estimates here. So no matter what happens here, if these estimates are just half true, well, then we can see that we have some extremely good income potential here, or growth potential. So out of the three, there's no doubt that Facebook is my absolute favorite when it comes here to the fast graph. When we're looking at Stockopedia, we can see that earnings quality 96, momentum 82, and stock rank overall 84. They're all above the 70 that I do like, and we can see that the PEG ratio, which is the price earning divided by the estimated growth, is 2.2. Now, of course, the estimated growth can be dropped quite quickly and dramatically if everything goes the wrong way due to the crisis. But right now, at least, they're looking way better than the two others. We can see return on capital, on equity, and operating margin are looking great here. They're very safe. We can see that the earnings per share are looking absolutely fantastic. We can see that the free cash flow is, we couldn't wish for a curve better than this. And we can see that their working capital, they have a lot of dollars to work with here. Net debt is negative. Interest coverage, of course, they can pay their interest, and the current and quick ratio are looking great. On the analyst side, they are even further out than with the snap here before. They are just leaning on a strong buy. So out of these three, if I should pick a winner, it would be again Facebook. It is one of my favorite stocks, and I made a video the other day about covered calls, and it is one of the stocks that I've had in my US portfolio for a while, and also sold some covered calls options against it. It has been quite nice. I have experienced once that the stock was called away from me. It simply rose up too quickly, but then I just bought it again on a retracement and sold some more call options. If you have no idea what I'm talking about, just search in my option trading series under covered calls. All right. If Facebook was out of the picture and I should choose between Twitter and Snapchat, I think I would lean towards Snapchat. I would have to do a bit more research, but I think Snapchat would be my favorite there. And just to sum up, all of this Trump drama with doing executive orders and so on, I actually think it is a spin for his election campaign. He wants to take focus away from the virus and the handling of that. So my guess is that he will focus on this. He has been mentioning a lot about that crazy concept of Obamagate that has been pretty much shut down, even by his friend over at Fox News. And then I think he will focus a lot on China in the coming time, both on their handling on the virus and a lot of other issues, the copyright issues and so on. He will do all he can to remove focus from the handling of the virus. So when we're looking at the three social media stocks here, my best judgment here is that it might be pressing the price down a little bit. But what I think here is, and I can read that from a lot of the conservative politicians, they're not interested in this. And basically, Republicans, conservatives, what they're saying is less government interference. And right now, government is interfering and trying to pressure a privately owned company into doing specific things when it comes to criticizing the president. So I think this is a no-go, and I think it will be gone as quickly as many of the other funny things that have come out of Trump's tweets. I think he'll realize that this is the wrong way he's going, and in a week or two we'll not hear any more of this, and I think it will stop having an effect on the stocks. That is at least my guess. Then again, I'm not a financial advisor, so don't take my advice for this. Do your own research, do your own due diligence, use your own methods and strategies. Alright, that's all for me now. If you haven't done already, hit the subscribe button, the like button, all the buttons you can find down there. I'll talk to you again soon, and take care of yourself and your money out there. Bye for now.